Major bank failures. I mean, huge banks, leaving most people wondering, is my money actually safe? What should we be doing? Is a bank run happening? How can we protect ourselves from major bank failures, from recessions? Well, that's what we're going to be covering today in Scale Through the Fail. Let's do this. Good morning, everyone, and welcome to Scale Through the Fail. I am your host, Robert Bean, and today we're going to be talking about your money. Yeah, we're going to be talking about your money because right now, that is something that a lot of people are wondering about. What's going on with my money? With all these major bank failures happening all across, many speculators believing more might be coming and in short order. A lot of people are looking at their finances, their assets, their bank accounts, and going, is my money safe? Is a bank run happening? What can I do to protect myself if we go into a recession? How do I prepare for that? So today we're going to dive into those very questions. Now, to be clear, I want to start right off the bat. Disclaimer, this is not financial advice. Just like we always say in this show, everything that we give you is as data-driven as possible, so you can research that data yourself. And then we always try to emphasize that we are still human. There are still inaccuracies, misinterpretations, and opinions involved. So make sure that you understand that when you're listening, you don't go, well, Robert or Larry or the guest on the show said to do that. No, listen, what we're saying to do and all we say to do is to be aware, to do your own research and make your own decisions. That's what we're saying, and that will always be. So if at any point in your brain you think that someone's telling you to go do on this show, go invest in something, that is not what anybody's saying. Shoot that thought down and say, nope, what they're really saying is to go do my own research, to formulate my own opinion, and then to connect with really wise, smart, educated people in that area. All right, now, disclaimer out of the way. We're going to tell you what the mortgage is going on. Larry, good morning, my friend.
Morning, boss. How you doing?
Doing all right. Thank you for jumping in, even with the kids on spring break.
Yeah. Hopefully, you guys don't hear him in the background, but he's quiet now, so we're good.
All right, we'll try to speed through this. I like how last night we're like, this show's gonna be probably a longer one, and then the little man is like, well, then I'll be there to make sure. Dad's sweating the whole time. So, Larry, what is going on, man?
So if you have been paying attention to anything, right? Like you're not living under a rock, you know that there's been some crazy news about banks and the problem that they're going through, the turmoil, so to speak. So bank failures, of course, is what we're talking about. Specifically, Silicon Valley Bank, which crashed Friday morning.
And Signature.
And Signature, which was on Sunday. So literally within 3 days, the second largest bank failure in U.S. history, the first being Washington Mutual back in 2008, if you guys can remember that, right? So that's the first biggest. The second biggest was Silicon Valley Bank. And then the third largest came in on Sunday. So within like 72 hours. Now, the crazy thing is this all happened while you and I were on the last week's call. So we weren't even aware of what this was like news hitting while we were doing the last week's call. So there's no way we could have been able to report it. So even though some of this might seem like it's a little bit late, well, it's because it happened the moment we were on the last week's call, right?
Yeah.
So what does that mean for us in real estate and thinking about buying houses? Well, because of the bank failures, rates actually dropped. And I'll explain to you why a little bit later. But we did see a drop under the sevens, right? And it's funny because Robert and I were kind of joking about people are gonna, they're not gonna buy at 7, but once it hits 6s, they're gonna start rushing, right? And we're kind of joking about it because we were thinking that the rates would stay in the sevens for a while. Well, we were wrong. Like they immediately went down to the sixes. In fact, it went from 7 to 6.74 or something like that. So it dropped, or actually 6.76. So it dropped almost by 0.25%. And then the next day, Monday, because that was Friday, Monday, because of Signature Bank, it dropped even lower to like almost like 0.75%. But so today's rates are at 6.69%. That's actually before today's update. And last week it was in the sevens. So even though it went up and down a little bit this whole week, it is lower by literally like almost 31% or 0.31%. So yeah.
So why would the banks lower an interest rate when things are bad?
I'm going to give you the quickest, simplest version possible. Bank failures means people are afraid to invest in banks, so they took their money out of the banks and they started investing into other things like mortgage-backed securities. I'm not saying that there's an inverse relationship, but if people are taking money out of the banks, they got to invest it somewhere, and mortgage-backed securities is going to be one of the places they like to invest in because there's less volatility, things of that nature. So a lot of other investments were being invested in, but mortgage-backed security was just one of them. So the prices of the mortgage-backed securities actually went up. So I think last week it was under $1, like maybe 98 cents. I'm sorry, $98. Now it's in the $1. I'm sorry, $98. Now it's in the $100 per.
Yeah, the speaking of it going into other investments because people doubt the system, which I will say this, you all should absolutely doubt centralized banking always. And you need to understand centralized anything for the most part is riddled with instability, corruption. But the most important part that people don't seem to understand about centralized anything is it's a self-preservation machine, meaning that the only way that it survives is if it consumes anything that jeopardizes its power and authority. It's no different than a government. A government can never allow, for better or for worse, by the way, guys, we're just being objective. A government can never allow an insurgency inside their own country. They have to stamp it out. We have seen in history what happens when something of power rises up and challenges the centralized system, for instance, a government or centralized banking. So what happens is that centralized banking has to stamp out. Again, for better or for worse, you fall where you want to fall on that domino. I don't really care, but just understand. So a lot of people went, Bitcoin, for example, is up significantly, right? It's up just in the last 24 hours, it's up 6%, which when you have an asset that's worth right now $26,000, that's a 6% is significant, right? Just like 6% of a mortgage loan of $300,000 is a lot of money. And so it being up, that's why little rate changes are a big deal, because you're talking about a big long-term thing. So the small things have an impact effect. So I just want people to understand, like, first of all, what you said is true. Other investments were being looked into and invested, and that's why Bitcoin is up. I mean, that's where people go when they turn around and they see centralized financing. They go, okay, well, I'm going to look for decentralized financing. And there's no bigger decentralized financing than Bitcoin right now. The other thing, too, that I say, and this is just a hypothesis, this is just I kind of wonder if the interest rate drop was like when you go to cancel your internet service and they go, are you sure you want to cancel? We'll give you the next 3 months for half off. Right? Oh, he's got a song going on back there.
Yeah, sorry. So
that's kind of, but let's look at mortgage-backed securities right now. Look at
so
those numbers.
Yeah, so like I said earlier, they were in the $99 so under 100 last week, and this week they were over 100. So if you look at the different charts, it's actually up by $1, right? Which is significant. Okay, so you guys understand that, right? And there's confidence in the MBS because, of course, of the rest of the things that are happening, right? And it's funny because if it wasn't for the banks failing, we probably would have seen an increase in interest rates and maybe a drop in MBS pricing because the Fed data came out with the job market being strong, right?
Yep.
So what we
So
were
it's really crazy to continue. Sorry.
yeah. So if let's pretend the bank figures didn't exist, then what we would have seen, what we would have expected to see was the numbers being opposite right now, right? No, rates going up and MBS going down. So the bank failures had a significant impact on interest rates to the point where it almost superseded whatever other data came out, right? But just so you guys understand, is not out of control. It's still kind of volatile. It still go up and down, right? The rates were a little bit lower, but now they're a little bit higher. And now we're kind of waiting on what's going to happen with the Fed in terms of all of this information.
Yep. It's pretty
So,
crazy, man, what we're
yes,
seeing. But
yeah,
yeah,
and overall rates have gone down as well, as you can see. I mean, they did go up, yesterday, but not by much, right? But from last week to this week, they've dropped again significantly. 0.3%, 0.35%, depending on what you're looking at. And as you can see, the MBS is of course increasing in its pricing. So again, the inverse relationship there. So again, the bank failures is the shifting in investments, which increase the MBS purchases, which is what we are talking about, right? So the question is, are more banks going to fail, right? There has been predictions and rumors because I wasn't sure when I first heard about Signature Bank failing, but I read that it was literally directly because of what happened to Silicon Valley Bank. What I mean by that is everyone heard about the Silicon Valley Bank failure, and then people started reacting. They made a run for the bank, as what we call it, right? They all started going to the banks and wanting to withdraw their money because they were fearful of their money, being locked up and they couldn't get it. And Signature Bank, unfortunately, was victim to that bank run, and therefore they failed as well. So it was an actual domino in that situation, right? And
yeah.
and Robert, you even pointed out, like, I think it's Credit Suisse. I don't know how you pronounce Suisse.
Credit Suisse, I think.
Yeah. In Switzerland, they actually started feeling some turmoil as well, but they were saved by the
In other
Swiss
words,
bank.
they should have been a bank failure, but
Yes.
were artificially propped up. And you better believe the people of Switzerland will be paying the price for that, especially in the type of government that. And I'm not saying for better or for worse. I'm saying when we hear of the government ever stepping in, they love to use terms like rescue, saved, prevented,
Uh-huh.
and I'm like, no, that's not how that works. There is
Yeah.
always a cost. It's like it's kind of like the hero syndrome, where it's like The Boys TV show does a good job of this, where they're like, oh, a hero comes in and defeats the bad guy, but as they were defeating the bad guy, they killed 10 people
Mm-hmm.
in the collateral. And so
Yep.
it's like, oh, we saved Credit Suisse, we're heroes, we're amazing. And it's like, but how many people's lives have you destroyed in the process?
Mm-hmm.
It may not be the ones today, but what about the ones tomorrow? What about our kids? And we're not in Switzerland, but I'm saying from a perspective of what about our kids? Are they the ones now that are going to pay the price? And so for everyone who looks at this, just remember, nobody does anything charitable from a government perspective, from a business perspective, because that's what charities are for.
Yes.
And so if it's not a charity coming in, then someone's paying the price. In fact, let's talk about it. First Republic Bank just got saved by Goldman Sachs, JP Morgan, and a few others. And people go, see, they didn't come, and it wasn't the government, so taxpayers won't pay. And I go, do you know where Goldman Sachs gets their money from? And their bailouts from? They still owe the government a ton of money. The government keeps giving them money to keep propping them up. So if you think for a fact that when Goldman Sachs, who has an abysmal record, just so you know, a terrible record in finance, turns around and bails someone else out, it is absolutely at the cost of the taxpayers. Do you know why we know this? Because I believe it's only Elon Musk is the only one who is a business who has ever taken out a business loan and paid it back in full from the government, which means that every other business who has ever had any government debt has not paid it back, which means we're still paying that debt.
Mm-hmm.
We haven't made our ROI, and it gets harder and harder to reach ROI every day that it passes.
Yep.
Sorry, I took that over, but
No.
we're
That's
gonna
okay.
unpack a lot more as we go.
No, it's okay because that needs to be said, right? The reason why the Swiss central bank stepped in because they saw what was happening with the U.S. banks, and Credit Suisse was in the same kind of crosshairs, and they're like, we can't allow this to happen. So they stepped in, and we've talked about this in the past, Robert, how capitalism is supposed to be a natural evolving thing, survival of the fittest. People die, people win, whatever, right? It's supposed to be left as is. But with these bailouts, they're, for lack of a better description, they're retarding the natural process of capitalism, right? And they're messing up the way things are supposed to be. So it's almost like imbalancing things, and that can create what I actually am worried about, a massive overcorrection that we're not going to be able to survive, right? Because it's not natural. What's happening is not natural, right?
All right, let's wrap up this because we're gonna get into this with all the articles and stuff we have today. So let's wrap up this because you and I could just talk forever. But
right. Okay, applications are up. Why? Because rates are down. Of course, duh. Right?
Yeah. Surprise, surprise, as you said.
Yeah. But don't forget about the Fed. They still have to respond to everything, and that's coming up pretty soon, right? Are they going to raise interest rates? Are they going to keep it the same? Who knows? But they do have to react to everything that's going on. So there you go.
Yep. And I will say this, as the Fed has proven 1,000 times, they are not your friend. They are not going to help you through this. So if you think that the Fed's going to come in and make smart adjustments, and I don't want to be a jerk, but make smart adjustments to help you, the Fed doesn't care about you today. I'm being real. They do not care about you today. They have shown that they are always reactive, not proactive. Otherwise, COVID crap wouldn't have happened. We've talked about this numerous times. I don't want to get suicided, so we won't talk about it too much. But just how else to put it? Don't rely on the government to fix your problems today. Rely on the government to create more problems for your kids. Don't trust me on that, though. Go read the history. Go see how people are impacted. And then also look at your own life. If they fix the problems of your parents, you wouldn't have the problems you have today. If all their promises and things like that for generation after generation were actually working and being upheld, then guess what? Our inflation wouldn't be where it is. Housing prices wouldn't be where they are. We wouldn't have all these artificially propped up companies. We'd have dead companies that don't belong in business, and we'd have good companies that do. Simple as that. All right, now let's do something fun before we get into something intense, and then maybe we'll try and do a relationship card at the end to lighten things up, huh? So, what the funny fact, man? Random funny facts that make it go WTFF? So we're going to do a little true or false about the shortest war in history, Larry.
Oh my gosh.
I expect you to know nothing about this because I didn't, but I just wanted to do something fun. So yeah. I'm not short, you're short. We're going to war. I feel like that might have been how some of Napoleon's wars started.
So are you saying shortest in the shortest average soldier height, or are you talking about shortest in like the shortest, like, or is it both? Right?
Who knows? We're gonna find out. So, true or false? The war was started by a country that was 85 times smaller than the country they were fighting.
Oh man.
Like that already, that question, you're like, tell me someone wasn't that dumb.
You know what? I'm gonna guess.
And keyword is started. Okay, it's one thing. Like, let's use America for example. It's one thing to say, hey, right? Like, we're trying to be peaceful. We're trying to pay our taxes. We're trying to do things. We're trying to do this amicably and remain a colony. And then Great Britain's like, we're gonna push you to the point to where you can't afford to live, and then blame you. Right. So it's different when a big country goes and starts a fight with you and you defend yourself versus you're the little country starting a fight with the big dog.
So I'm gonna guess Taiwan and China, since Taiwan is small and China's really big. And I think I can see Taiwan trying to start a fight because, they got buddies like the U.S. So that's going to be my guess. But I'm pretty sure I'm wrong. But that's what I'm going with.
So it's true, is what you're saying.
Oh, yeah. The war was started.
Okay, hold on. I want to
yes.
Taiwan size compared to China.
I don't even know.
I want to know actually. Holy crap! China is about 267 times bigger than Taiwan.
And then that was wrong.
That is absurd. All right, here it is. Zanzibar, which is about 950 square miles, fought Great Britain, which is about 80,823 square miles at the time.
Wow.
Absurd. Why would you even start a fight with them? Like, friggin' get out of here.
Do you even know why it happened?
We will. I got you, man. So the war was so short that it ended before even a single life was lost. True or false?
I would say true.
False. The war ended after one person, yes, one, was killed by accident.
Oh my gosh.
From a stray bullet.
Oh my gosh. Wow.
Could you imagine being that guy like, oh dude, the war's over. And then like, hey, nobody was lost. If everything's okay, it ended well. And they're like, hey, are you bleeding? Like that would super suck for that dude. Like, come on now.
Suck. Yes, that would definitely
like,
suck.
Geez,
you died for no reason, really.
Just my luck type of thing, right?
Yes.
Okay, my cat was jumping on my desk. Like, what the crap? I think she wants to be let out of the room. Hold on.
He has cats and I got kids, so I don't know who wins.
All right, moving on. With only one person killed by accident and such a vast gap, obviously, in military power, how long, Larry, do you think the war lasted?
Well, I mean, it's the shortest war in history, so I mean, how long does it take for a war to start and end? I mean, at least 24 hours, right? I mean, I would say someone has to declare war, and then they have to like agree to be in war, or whatever. Or there has to be some sort of invasion. Or something.
I don't agree to a war.
So they have to like meet up, right? I'm thinking like olden days, right? I'm thinking like like freaking gladiator, right? Hold the line, right? So they have to set up. And then there's a bullet though. There's a bullet involved. So yeah, I say 24 hours is how long.
24 hours. You ready for this? The war lasted 38 minutes, and that included the 30-minute surrender deadline Great Britain issued initially. So really, the war lasted 8 minutes.
So wait, you're telling me Zanzibar decided to declare war?
So here's how it worked. I'll explain it to you. It's actually really, really funny. Just to be clear, everyone, I don't think war is funny. I think war is generally very stupid. I think nobody wins in war. But I think that when we talk about the shortest war and we talk about things like this, it's a healthy way to talk about history in a way that people care. Do you think anybody else is going to learn from this from a textbook? No. But this is a cool way to have fun. All right. So that being said, here's a story. Basically, you had someone in power. Great Britain said, you don't belong in power. You run the country bad, blah, 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 blah. We're going to give you a deadline of 30 minutes to succeed, if resign, step out of, literally leave the building. Mm-hmm. The dude was crazy, you would imagine, and said, well, I've got 100 poorly trained soldiers, and we're going to hole up in my little mansion throne room type of thing, and you're not going to stop us. And Great Britain's like, bro, like, do you know who we are? So literally, Great Britain blew up everything around it, and then everything in the building. I mean, just decimated it like you would see in the movies with just the bullets, and just obliterated it. And then the dude was like, oh, crap, and surrendered. Like, not even kidding. That is like, it was such a dumb war. Like, seriously, such a dumb war. Like, what? Like, now, great. Now all the buildings are shot up.
Right.
The one stray bullet guy could have gone home.
Yes.
Like, it's dumb. It's so dumb. But
Right.
it makes me have a funny thing to say at the end that could actually be useful. So today we learned that interest rates are down by 0.14 points. That's a good thing. Yay. It's supposed to be a green arrow. I need to remind them. Green arrow for down on interest rates. Mortgage-backed securities are up by 0.05 points. Not that much there, but listen, we'll take what we can get. And that maybe there should be a tier level for how soon you can surrender and how little damage and loss of life there is.
Yeah. All the explosions sounded a little overkill, right? It did. I mean,
well, but if only one person died versus 100,
that's true.
right? So here's my thing. The way I look at this tier level, like imagine someone's like, because we do this in various stages. It's a way that we've adapted when it came to hostage negotiations. We were please don't suicide me. The FBI used to be very terrible at hostage negotiations. And they've gotten a lot better. See, I'm saying good things, guys. They've gotten a lot better over the years, but they used to be very bad at it because we're men, we're very prideful. And so it's always overpowering people. We don't play the psychology game. The FBI didn't play the psychology game. They always tried to play the hard game. Do my demands. We've got more people. We've got more resources. We'll starve you out. Well, look at history. Like those people go crazy. They already know they're up against the odds. They already know that. So how is lording that over them ever going to work? So the way I look at it is like, if you turn around and say, here's the terms of surrender before the war starts, right? Like, and they do this, right? Here's right? Great Britain said, you have to resign. There could be tiers where they're basically saying, if you do this by this time, you can still get out. Because here's what usually happens if you read history. They make one offer up front to not do the war, whatever side, right? And the other side says no. And so they go to war. And then that's it. Those are the two options. You win or lose the war. But what if they could still, and I know people will think of this as crazy, but at the end of the day, the goal is to save life, right? To save people's lives, to prevent more war. Well, what if you could turn around and that person could still get out something from it later on? In other words, it's not an all or nothing. Because when war is all or nothing, the moment they say no to the agreement, they're going to fight to their death.
Yes.
Generally. That's why Zanzibar is such a funny story. But generally, they're going to fight to the death. Or you have to do something ludicrous where someone on the inside has to kill the guy at the top to get the surrender to happen. And so I think it would actually be super interesting to see what it would look like if we gave these people a chance, even after the war started, to get out. Once you show them your power and you're like, listen, you're losing here. Come on, get out of this. We're going to try and find a way to where you're still not entirely screwed. Now people go, well, I want them to pay and they're terrible. And I'm like, but do you want your desire to make them pay is enough to make more people lose their life for it? That's where we have to set our own pride and our own humility aside. See, he said, I know. That's right. Robert preaching the truth there. Anyway, thanks for coming to my TED Talk about war. Zanzibar, thanks for making a good decision and surrendering. Rip the guy who hit the stray bullet. But otherwise, good job. Guys, make sure you subscribe to our YouTube channel that's coming up. We host everything there. We're actually getting more and more views. Oh, and by the way, my shorts are now on YouTube too. Not my literal shorts, but rather short form content, just to be clear. And we're getting some views on it. So check it out. With that being said, Larry, we got to get into it.
Yes, I'm ready.
Oh, man, this is a crazy one to get into. So bank run after bank run, we've talked about it, right? We saw the word bank run just came out of nowhere. Everybody's talking about bank runs. So the first thing I want to establish in the most rudimentary sense is what is a bank run. Now I want you to describe how you would describe it, Larry, and then I'll see if I can add anything to add to it or anything like that. But how would you describe a bank run?
A bank run is an unnatural desire by depositors. That's what we're going to call them, depositors, right? An unnatural desire to take all their money out of the banks as fast as possible, motivated by whatever reason. In this case, the failures of other banks. So it's kind of like I'm banking with whatever bank, and I hear this bank is failing and this bank is failing. I'm like, dude, I have like $1 million in my account. I need to draw that crap out right now. Otherwise, if that bank fails, I'm gonna lose all my money. So I'm one of thousands, maybe even hundreds of thousands, maybe even millions of people thinking the same thing, and they all do it at the same time. That's a
We
bank
have
run.
seen bank runs before too, by the way. They've happened throughout history. Definitely one of the most notable ones happened right in the Great Depression. There was just obviously a huge problem there, and you had rioting, you had mobs, and deaths because people believe that the bank teller has any control or any say. They don't, guys. By the way, so bank run, yeah, I would agree. Bank runs are actually very simple, right? It's no different than when in Tennessee, if snow or an ice storm happens, everybody runs and buys bread and milk. It's not smart. They have no plan for it, by the way. Most people who have dollar bills like in their home lose them, get crumpled up. It's not necessarily a safer strategy. Now, don't get me wrong. I'm not saying that you can't protect your assets because we're going to talk about that. I'm saying if you don't have a plan, then how do you know you're making a better decision? If you haven't thought through your decision, then how do you know it's a good one? So an important thing to understand too is that when a bank run when the bank run happened for like Silicon Valley, people need to understand this. The little guys, yes, I'm saying you and me and other people who are not uber rich, we'd go and buy some Bitcoin or some other things. But you have to understand the big guys, they just moved it to another bank. So when you're turning around and you're afraid and you're like, I'm going to go pull all my money out because that's what the big guys are doing, the banking system's failing, you have to understand the big guys are not doing that. First of all, it's too hard for them to move that much money into physical assets. It would be a nightmare for them to try and do $1 billion worth of Bitcoin at once. That's why Michael Saylor, who is one of the largest owners of Bitcoin out there, and his firm, they have been doing it over the course of like 15 years because it just takes time and there's a lot of effort that goes into it. So first of all, when you have these scary things happen in finances, just take a breather, say, okay, what are my options? And then figure out which one you resonate with. So I just want to make that clear because I think it's really misunderstood. The big banks, the big investors and capital, venture capitalists, they didn't go and just suddenly buy up all the Bitcoin. Otherwise, Bitcoin would have been friggin' $100,000 a coin. What they did is that they just moved it to another bank that they felt was more secure. Now, will they diversify further? Maybe, but that's going to be very individual. Very individual. All right, moving on. So, should you be worried about your cash? And are there ways to protect yourself against banks failing? So, at a very surface level, FDIC is an important thing to discuss. I don't even know what happened behind you. That dude, I just heard a lot of noise. Cracked me up. So FDIC, Larry, why don't you share FDIC? And again, very, very basic definition of what FDIC insured accounts are.
So FDIC is a government entity designed to insure banks in case of failures. Okay. So literally, and I made a joke about this. I was like saying the FDIC hasn't done nothing since 2008, but there's a lot of big failures out there. Okay. But we just don't hear about it. Right. But their job is to basically guarantee or protect the depositors' money up to $250,000. I think that's the number. I think that's like a standard number, up to $250,000. So let's say, Silicon Valley Bank fails. every single person that deposits money to Silicon Valley will have their money protected up to $250,000. Right. So when I say protected, that means they're going to be able to draw it out with the FDIC's help. That's basically what the FDIC does. And of course, most banks, most reliable banks should be FDIC backed. So
Yep.
yeah. Mhm.
Yep. It's very simple, guys. It's just the government. Whether you believe it or not, I'm just saying what it is as defined by them, which is the government's insuring your money in a FDI insured bank account up to $250,000. It is that simple. Now, to be clear, you have no idea of the timeline of payouts. Okay. You don't know the order. So just be mindful. Now, here's what I'll say, because I like to be very objective and I like to be very fair. Since the FDIC was established, no FDIC, as far as we know, as data and documentation goes, has ever lost money. An FDIC account up to the $250,000 mark has ever lost their money. And banks have failed. FDIC insured banks have failed. That's how we know that sometimes it can take a long time to pay out. It's the government. You should expect always that it will take a long time to pay out. So FDIC can be a very wise choice. If you have over $250,000 in a bank account, you might want to just diversify it amongst several FDIC insured bank accounts. There are other things that you can do, by the way, to protect yourself against recession. Now, remember, protect yourself. The word I almost would use instead is like insulate yourself, because you'll never fully be able to protect yourself from life disaster like that. Just the things will happen and they will hurt, and there's really no way around it. So it's more of what can you do to minimize the impact, and make it a little bit easier for you when crap hits the fan, as they say. So that's where we're going to get into real estate, guys. Is I thought I had more slides here. Real estate is one of the most safe bets you can have in a recession. Now, there's a couple things I want to make really, really clear as a disclaimer, because I feel like, again, there's too much of this everything's perfect attitude. Every real estate agent, and when I say every, I'm generalizing, okay? Obviously, I'm a real estate agent, and I'm not saying this, but every real estate agent goes, it's always a good time to buy or sell. It may not be, though. The thing is like it's very individual. So you hear real estate agents say real estate's the best for against inflation. Yes, but remember, if it screws over your life because you didn't plan it well, it doesn't matter if you're hedged against inflation if your current life is screwed because of your financial decisions. So you don't just opt in. So let me give you an example. I think it was last week, Larry, we covered that family in Ontario, I believe in Toronto, that bought that house and ended up upside down. It might have been the week before. And they bought it because everyone told them that real estate was the best thing ever and to just do it. But for their financial situation, it was a very unwise thing. Yes, overall, real estate is a great, great vessel. It is arguably one of the best hedges against inflation. And it is one of the best things because it's proven to appreciate even through a recession. But like that family learned very quickly, if it doesn't work for you, then it doesn't matter what other people say. And so I want to put that disclaimer out there before we get into the fact that real estate is probably your best bet in a recession. So real estate can act as an important hedge against inflation. That's always a good thing. Spoiler alert, your money in the bank depreciates faster than inflation increases. It does not keep up with inflation. I don't know of any centralized bank that does keep up with inflation, because guess what? They borrow money to pay you your interest on their accounts. So if they borrowed money and paid you an interest that was higher than what they owe on it, they wouldn't be able to operate. So you have to understand, like, your money in the bank is depreciating in value. It absolutely is. It is. The moment it gets put in that bank, it's the car lot thing where you drive it off the car lot and it's basically just depreciated in value. So real estate outperforms every other asset that we know of in recessionary environments. It's important that we say recessionary environments. There will obviously be assets that outperform real estate. Someone could say Bitcoin. Bitcoin has outperformed gold. Bitcoin has outperformed stocks. Bitcoin has outperformed bonds. I'm not saying buy Bitcoin. I'm saying in certain scenarios, assets can have an advantage. We're talking about scary ones like recessionary. We don't know if Bitcoin can to survive a recession. So we're not going to give you suggestions on researching Bitcoin for recession. You can go do it yourself. But real estate, you can go look up the data and say, what happened with real estate during a market crash, during a recession, during a depression? What happened? And you will see everybody who hung, pretty much as a general, everybody who hung on and was able to survive through those difficult times with their real estate assets are now in a very good position. So that's why we're telling you that. Larry, would you agree, disagree on kind of what I'm saying?
Yeah, I agree 100%. Again, disclaimer, we're not telling you what to invest in. We're not telling you what you should invest, what you should not invest. Even with the banks, we're telling you that we're telling you the facts about the bank failures. We're not telling you that don't deposit your money in the bank. We're not telling you that, right?
Mm-hmm.
So the reason why I believe real estate, just like you're saying, is a great investment is because it does show in terms of data that the increase in value does outperform inflation, right? And it does show that it's a pretty steady sort of an investment in that, you're not subject to a whole bunch of variables that can make the housing market crash, right? It does crash, but not as often as all these other different types of investments,
And
right?
not
There's
as
not as much,
instantly,
yeah, not
right?
as instant, yeah, not as
Bitcoin can
instantly.
drop tomorrow.
Yes,
And again, guys,
absolutely.
I like crypto, so I'm not hating on crypto. I'm just saying it can crash tomorrow. But even in a doomsday scenario with interest rates and a perfect storm, real estate's still going to have a stretch of impact.
Mhm.
As we're already seeing that
Yep.
it takes time for us to feel it.
Yep. And you can liquidate your properties pretty quickly if you need to,
And
right?
in multiple ways. You can
Yes.
sell them. You can create them into income producing assets.
Mhm.
You can do HELOCs, cash out refis. You
Mhm.
can do various things with a real estate property to suit your needs, what you need in the time.
Yep, absolutely. So because of that, I think it's a wise investment. I always tell people it's called real estate for a reason because it's real, right? It's not digital. You know what I'm saying? It's like you're physically can touch a home, right? Like people can see it and smell it, right? So it's a product that you can actually trade, right? So when you sell a house, you're literally trading like physical, like actual tangible stuff to them.
Yep.
Whereas like Bitcoin, it's currency, but it's really just assigned value based on what everyone agrees upon. But it's not like gold. Gold is like physical, right? So that's what gives real estate a little bit of advantage, right? Also with cash in general is like whatever the government dictates is worth based on what they're doing. So even though tender is a physical thing, in reality the value is assigned by whatever the government assigns value to, right? But a house is a house. I mean, there's value
Yeah,
to it no matter what.
bonds and things like that.
Yeah. So yeah,
Yeah,
to,
and that's an important distinguisher right there too. It's like basically, even in worst case scenario type of things, the beauty of it is that when you have a house and it's a need for someone else, you can come to an agreement and it doesn't have to have anything to do with the government setting a price.
Mhm.
And when we saw that in COVID-19, or during COVID-19 breakout, and people were paying absurd amounts for homes,
Mhm.
that is a valuable asset. Your dollar, you have absolutely no control over the value, and you can't do anything to make it more valuable. You can make your home more valuable.
Yep.
You can't do that with a dollar. So we're not saying don't have a dollar. We're saying if you're worried about inflation, if you're worried about recessions and depressions, look at investment avenues that have a proven track record. Does it mean guaranteed? No, nobody can guarantee it. Okay.
Nope.
Nobody can guarantee it. But obviously, we live in a world where we try to be cautionary. If we
Mhm.
can, we try to be proactive instead of reactive. And so if you look at it, and this is an important thing to remember, more millionaires are made through real estate, that, as far as we know, than any other industry, investment platform, you name it. That alone should be enough to make you look and say, that's probably a pretty safe bet. If you do it right, it's probably a safe bet, because otherwise people wouldn't be succeeding with it. I mean, I was talking to my CPA yesterday, and he was telling me about this 28-year-old who, his team sells about $80 million worth of real estate a year, and he's 28 years old. Do you know how hard it would be to do that in any other industry?
Mm-hmm.
And through the success he's had, he was able to buy rental properties and numerous other things to where now he can retire at 28 years old and not have to work a day in life. And listen, just to be clear, my goal is not to retire, but I'm saying that's a good context of what someone was able to do with real estate. Now, he didn't go and put all his money into used cars, right? Okay, there's a reason for that. Not that you can't collect cars, not that you can't make money from cars. But here's the thing. When a recession happens, go look at car sales during the recession. And then you might think twice about selling cars or buying cars as a hedge against a recession, because that's what we're talking about. We're not talking about general investments. We're talking about people are worried about bank runs, people are worried about inflation, and people are worrying about, are we in a recession? Is a recession coming? Is a domino effect and we're going to lead to a depression? So we're just trying to give you some really good thoughts to consider.
You hear the background noise?
He's adding some humor, some lightheartedness to the very serious topics. I love it. I love it.
And you know, I mean, and I've said this before in the past, and this is something that everyone should know. Just Google it, okay? The U.S. Census stated that the difference in wealth between a homeowner and a renter is 80 times greater for the homeowner. Okay, literally, what they're saying is that once you decide to become a homeowner, you are positioning yourself to have 80 times more wealth than who you were before you were a homeowner, right? And the two things that contribute to that factor is equity from the home and retirement accounts. Okay, so those are the two things that are literally across the board. United States U.S. Census Bureau are stating the difference between people who are literally in the spiral of poverty and the people who are actually amassing wealth. And it's home equity and retirement accounts. Okay, so that speaks volumes in terms of what you should really consider investing your money in if you're going to invest in anything, right? So yeah.
Agreed. So let's talk about now, how do we make this relevant to real estate agents who are like, whoa, now that is a lot of conversation that I did not wake up and think that I was going to get today. I'm just trying to get my dose of real estate, stay on top of it. So let's make it kind of relevant to you guys, because this is extremely relevant, I believe. And I don't necessarily, we'll talk about news or noise, but I don't necessarily say, oh, it's news in the sense of panic. And you got to go do actionable things, but more of understanding that your clients are afraid.
Mm-hmm.
And if you don't have answers, you better believe they're not buying or selling. They're going to be stuck, frozen, worried, reserved, conservative. But if you're able to go and paint a clear pathway for them and say, hey, don't worry about all that junk on your left and your right. Stay focused. There's a path through all of this. And here's that path. Your real estate agents, brokers, team leaders, coaches, consultants, mortgage lenders, real estate is very, very important. You can show people right now how historically real estate is one of their safest bets. That their fear. You want to go on a bank run? You know what? I would turn that into a little bit of a pun with them. Let's go on a bank run. Let's take that money and go put it into an asset that appreciates against inflation, that will allow you to have multiple options, increase your net worth. You can borrow against it. You can sell it. You can rent it out. You can do a multitude of things with it. When it sits in your bank, the only thing you can do is move it and lose it. Mm-hmm. You don't gain more. Just to be clear, you don't gain more because it depreciates faster than it appreciates. in your bank account. So you either move it out or you lose it and keep it in. So just make that abundantly clear, okay? So Larry, for real estate agents and loan officers listening in, what's some advice you would give them with all of the or you know what? Let's do the news or noise. News or noise, buddy.
It's definitely news, 100%.
All right, so now let's do what should you do next?
So I actually had someone reach out to me yesterday saying that, I want to talk to you about what's going on because they just bought the house with me, right? And I want to know what's going on with the market. I mean, I want to know if I got screwed over, and what he means by that is, did he buy too soon? Right? Because he has a kind of doomsday mentality. Like he's waiting for the crash. He's one of those clients, right? And I explained to him, and this is before he bought. I was like, if you're gonna wait for a crash, you're gonna be renting for a long time because there's not gonna be any crash anytime soon, right? And if there is, none of us can predict it. So don't even bother thinking that you can wait for a crash. See, because when people wait for a crash, they're predicting a crash is happening. And I'm telling you, you can't predict that, right? So he asked, "What about these banks?" I'm like, "This is not an indication of anything crashing, right? In fact, I told him the rates actually got better because of this, right? Because of the rates got better, that means more people are going to buy. Therefore, real estate is probably going to be more heavily invested in comparison to things like that. So it's not like there's a direct relationship, right?
Yeah.
So what I think that everyone in real estate and mortgages, and of course, even people who are thinking about buying, what you need to think about is the shift in money doesn't equal a failure in the system as a whole. It doesn't equal, a market
It's actually
crash.
the beauty of capitalism.
Yes,
One thing fails, you move it into something else that you believe will succeed.
absolutely. So this is actually a win in a sense for the real estate community. Okay, so there's nothing for you to fear about. Now, if you're worried about yourself, well then yeah, depending on how you have your money invested and what you have your money invested in, you should start thinking about that, right? But in terms of
Absolutely,
real
yeah.
estate, there's nothing for you to worry about. In fact, I think that this is even more proof that you should already be pre-approved because the people who are pre-approved enjoy some really great rates on Monday.
Yeah.
You know,
Yeah. I mean,
yeah.
well said. It's almost like we say that every single week.
Mhm. Yep.
But we wouldn't do that, would we, Larry?
No, no.
Guys, we want you to win. And if you were ready right now, you could be locking it in so fast and so efficiently, just moving forward. And so man, I think we covered some good topics today. I didn't want to beat a dead horse, but I just really felt with all the crazy news going on. So for everybody listening, what's your safe bet against recession? What's your plan? You can say you don't have one, by the way. I would venture to say most people have no plan.
Mhm.
Do you believe real estate is a good bet for you against a recession? Is it something you currently invest in? I currently invest in real estate. Is it something you're looking to invest in? Leave some comments. Would love to hear how you're viewing everything going on and how you're reacting to it, maybe even being proactive around what you think might be happening. I'd really want to know. For me, I'll just share with you. For me, continue to increase the real estate portfolio size, looking for very smart, efficient deals with multiple outs, not just one,
Mhm.
where it's desirable to where I could sell it, to where it can be rented, and to where it can be a rent to own. So it has multiple ways to appeal to multiple types of people in markets that are very strong. Um, that's what I'm currently doing, as well as just being very mindful of where the money is and what my money is doing. I don't want to leave too much in the bank.
Mhm.
And I don't really want to go into super risky assets that are very adverse to bank failures. Um, Especially so when a bank fails. So let me give you an example. Silicon Valley Bank was one of the largest banks for crypto. I like crypto. Just to be clear, I like crypto. I invest in crypto. But if some of the largest banks in crypto are struggling, I may personally, again, personal opinion, I may be like, who's going to fill the gap in crypto right now? Because I want to make sure they'll help me put money in, but I want to make sure that there's the liquidity available when I want to pull money out. So that would be my main thing is I'd be looking at liquidity. who's got really deep pockets, right? What do their net sheets look like, right? So that's me. Larry, what what are you doing, and how are you looking at this for yourself, for your personal family and stuff like that?
Well, I mean, I favor life insurance type products, right? I mean, obviously, okay, because
Oh, I do have 2 whole life policies as well.
yeah, and the reason why is because is you're not gonna get massively rich off of life insurance policies, but you have almost a guarantee like picture as to what to expect at the end, right? It's almost like you're using really simple compound interest math to figure out how much you're gonna make if you invest this amount of money consistently, right? So you're not gonna get wildly rich, but it's about the time value of money, right? I think crypto. I think a lot of these traders they're looking at like short term gains, right? They're looking
Yeah.
to they're making a living off of it, right? And I think that's okay to make a living off of investments. It's okay, but that's not what I'm trying to do. I'm trying to make a retirement off of my investments, right? So I'm not trying to pay for my pizza right now. I'm trying to pay for my pizza when I'm 65,
Yeah.
right? So
Well said.
that's what I favor right now. Is I wouldn't call it guaranteed or safer. It's just more like a smart way of saving. Kind of like when you're buying a house, you're saving in your house. That's why the wealth is there. I mean, when I tell people my net worth, they're like, "Wow, how did you accumulate so much worth?" I'm like, "Well, it's in my house. My net worth is I don't have that money in the bank. No, I'm a bad saver, right? If I have money in the bank, I'm gonna go spend it on toys and vacations and whatever. My wife would love to take our money and go on vacations, but no, I got smart. I invest into a home, and all my money's tied up in my house. So for us to cash in, we have to sell our house or do a cash out equity. So it's almost protected in that sense. You know what I'm saying? But it's a different way of saving. It's time value of money, right?
Yeah, that's why I tell most people, if you're bad at saving, don't have a HELOC, because you don't want direct access to your equity because you'll just spend it.
Yeah.
If you're good at saving and you're good at money management, a HELOC can be great for you, but you got to be really, really honest and objective.
Mhm.
Most humans are really bad at regulating compulsions. They are
Mhm.
not good at saying no to themselves. We love to think we're smarter than we are, more attractive than we are, more diligent. Oh, I could do that. No, you can't.
Yeah.
Like, you won't do it, because if you
Yeah.
could do it, you would do it,
There,
right? I
there,
think it's funny all the time when, like, people used to hate on Justin Bieber, and I was like, that kid every single day of the week sat outside a theater at 12 years old and played for people. I don't know people who even show up to their day jobs that consistently. Look at Ed Sheeran. Ed Sheeran, from like 12, 13 years old, he would literally go to clubs. He would take a bus because he wasn't even old enough to drive. His dad would drop him off in London. And at one point, I believe he was like, I think it was his 16th birthday. Ed Sheeran's dad dropped him off in London, and Ed Sheeran said, "I'm not coming home until I become successful." And Ed Sheeran literally crashed on people's couches. He played every bar and every club that he could possibly do. And so what I'm saying is, if that's not you, and it's okay if that's not you, not everybody's meant to be Elon Musk or Ed Sheeran. And to be honest, most of us don't want to be. I don't want to
Mhm.
be Elon Musk. Let me be very
Mhm.
clear. I want
Mhm.
way more time and way more time with my family than he has. And that's okay. But my point is that you need to know who you are,
Mhm.
your strengths and weaknesses, and your
Mhm.
financial plan needs to reflect that.
Mhm. It's
Your investments need to reflect that, you know?
yeah, yeah. I compare it to, and I love the way you put that. Right, some people just don't have the discipline. Right, it's almost like out of sight, out of mind. Right, that's why auto pay is such a great thing. Right, and if you talk to a lot of very successful, very high credit score people, they all live and die by off of auto pay, right? And that's the same kind of mentality with having a home and having your equity or your wealth in your home, because you can't touch it. It's you're making a payments every single month, and part of that payment is towards your principal. and then your home is going to increase in value, you can't touch it. So it's almost like having a deposit that you're not allowed to open, right? Or you're not allowed to withdraw from, right? I mean, just think about it. Just think about how many people would lose their houses if we can literally take a withdrawal from our house equity anytime we want it. Like, there's no such thing as a cash out refinance. It's more like a bank account. So my house has 100,000 equity. I'm gonna go ahead and I'm just withdraw 50,000 just for the hell of it, right? That's what a HELOC is, right? That's basically what
it's a line of credit.
So if everyone had a HELOC on their house, how many people would lose their houses? A lot of people would.
Most people. It's funny.
Yes.
I had a past client of mine reach out to me, and he said, check out this thing right here. And it was basically a HELOC. They just gave it a different name, some fancy, trendy name. And I said, listen, buddy, I'm going to be real with you because I care about you. You are horrible at managing your finances. And I said, if you had access to, I think it like $60K in equity or something at the time. And I said, if you had access to do that, what would you do with it? Tell me right now. And he'd be like, probably vacation, food, things like that. And I said, exactly. You would turn around and take all the hard work that you've built and you would throw it away. Now, it's not wrong to take a vacation. I'm not saying that. I'm saying that go work to take a vacation, but don't turn around and take your equity and throw it away, because that's going to, most people don't know this. Most people don't retire in a positive with enough. Most people don't.
True.
Social Security does not keep up with it. Even veterans have had problems with their VA payouts. I mean, there's companies with 401ks. We have seen time and time again 401ks get wiped out. Most people don't know this too. A company can guarantee a retirement plan for you as an employee, but if they get acquired, that can get thrown out the window because they can't. The Securities Exchange and I can't remember the other regulator of employment. They can't force a new company to service all the terms of the old one. That's negotiated between the two companies in the acquisition. So my point is, right, if you're depending on outside sources to funnel into your retirement, understand that most people end up using their home as their retirement plan. They'll do a cash out refi. They'll do a secondary HELOC.
Reverse mortgages,
or they'll sell the home, take the money, downsize. What do you think downsizers is? Downsizers almost always, 8 out of 10 times is what I would say, are people who turn around, are older, need the money, don't have it, don't have the liability of needing a bigger home anymore. So they sell their home, take the equity, buy a smaller home, live a bit more comfortably. So the whole point of all we're trying to say, guys, is like, if you're a real estate agent, one, have a plan for yourself that fits who you are, strengths and weaknesses. Don't lie to yourself. And the way you'll know that is go to your lender, go to your financial advisor, go to your life insurance, go to the people that know you and trust you and have an objective interest in your well-being. And then also do the same for your clients. Go educate them about what's really, really happening using facts and data, not your opinion. Facts and data. Show them about real estate, because to be honest, the bank failures should be one of the greatest incentives for people right now to go invest in real estate. Not the least.
Yeah.
People are getting scared. And I'm like, so what's your plan then? Because your mattress sure ain't going to help. Putting that cash under your mattress is not going to help the fear that you have right now.
No. It's actually probably the worst thing you can do. It's probably the worst thing you can do. Yeah.
Literally, money deteriorates, guys. I mean, just so you know.
Unless you have more than $250,000 in the bank, right? And most people don't. You have nothing to worry about.
Right? Yeah, it's not like the government has an issue printing more money.
Yeah. If you have an account in the FDIC protected bank, you should be fine, right?
Yeah. Don't get me started on their balance sheet.
Yeah. Now let's say every single bank failed. We have way bigger problems to worry about than cash.
Yeah. Your cash will be worthless. And to be honest, you'll just be really glad that you had a home and a roof over your head.
Yeah, because we'll be in the zombie apocalypse at that point.
Literally.
If
and
every single
you'll be boarding up the windows.
Yep.
You'll be friggin' establishing communities and yeah, you'll be a whole. Hey, it'll be like
your house will definitely be worth a whole lot more.
Yeah,
people will fight for your house.
Yeah, exactly. Seriously.
So massive bank failures is the least thing you should worry about. And withdrawing the money just to put it in your mattress, again, it's the worst thing. I mean, I don't know how many times I had people that could not help buy a house because they didn't have the money in the bank because they don't trust the banks, and they might be like the people that might say, "I told you so." I mean, that doesn't make a difference.
Right. You shouldn't trust them. You shouldn't. You should have a healthy, with anybody, you should have a healthy cautionary approach to every business deal that you do. You should always do it. Let me be clear. My mom wanted to invest in something with me. I wrote up a contract. I trust my mom. Literally, we have a great relationship too. So it's not even like one of those stories where we hate each other, blah, blah, blah. I have a great relationship and I trust my mom. But at the end of the day, business is happening. So treat it as business.
Yep. Absolutely.
Regardless of who's on the other side, I have a standard of when I do business. And that standard is we do contracts. Everything's written out clearly. All parties agree, sign on the dotted line, and we're happy. We move forward.
There's no assumptions. There's no confusion. It's all black and white.
So you look at a bank, you check, is it FDIC insured? You can learn, if you want to be one of those deep dive people, you can go see who they owe, where their money comes from. Like some people like that. There's nothing wrong with that. But just spread it out too, though.
Yeah, there was a Greek, some sort of Greek, I forgot, it's a super rich guy who has like $250,000 in like 50 different banks, right? And apparently, he was around when the Greek system failed or something like that. I forgot what the story was, but the Greek banking system
their
failed.
whole infrastructure fell.
Yeah, so
and they were bought by Germany, and now Greece is owned by Germany.
That's crazy.
Like literally, Germany owns Greece.
That's really crazy. but yeah, that guy experienced that, so now he has his money diversified in like 50 different banks, all up to $250,000. That way he's not exposed because he's protected. You know what I'm saying? So yeah, if no one needs to worry if you don't have more than $250,000 in the bank. That's basically the point I'm making.
And when you can, just keep diversifying into ways that complement your plan, meaning you have the right people around you who are tested and proven with good plans, right? I have a financial advisor. I also bring my CPA in on things. I have multiple people that I seek wisdom from. I also follow people that I trust and know. What are they doing? How are they insulating themselves? Because they're a lot smarter than me. And when they have a lot more money too, they're able to test and try different things. So I hope that, guys, tell us in the comments, did we bring you some value? Did we bring you some peace of mind about what's going on with the bank runs and the bank failures, and how you can actually take this and go get a win with it? You can help your clients go get a win. You can help yourself go get a win. Let us know in the comments if we brought you any value. Larry, any final thoughts?
No, I do want to point out that I'm glad that we did this show, Robert, because most of the videos and shows I've watched, it's all doom and gloom, right? It's more like, the world's going to end, yada, 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 whatever. And we're like trying to show you guys that it's not as bad as you think it is or what everyone's saying. And you can actually take advantage of this. You can actually
extract. If it was bad as they're saying it is, the last thing you want to be doing is buying anything other than canned food and
no.
A rainwater system. And like, if it's that bad, that's why I tell people when they say a recession's coming, everybody thinks there's a recession coming or a depression coming. I go, really? How much are there still food on the shelves in the grocery store? And they go, yeah. And I go, okay, so the vast majority of people do not believe that a recession or depression is coming. Because, Larry, let me ask you, I'll throw this question at you. And then we got Terry in the comments. I'll ask Terry too, and anybody else watching. If you believe doomsday, apocalypse, depression, which is a much more severe recession, right, was coming, would you be sitting on a live call right now just chatting and hanging out and watching Netflix at night and going to your day job? Or would you be stocking up and preparing for the worst?
Are you asking Terry now, right?
I'm asking you.
Larry. Oh, no. I'm not preparing for the worst. To me, the worst is not having a house. That's the worst.
And that's my point, right? My dad believed in the 2000s when everybody said that the computers would fail and everything, right? 1999. And then when 2000 hit. So my dad went and he stocked up on water. He stocked up because he didn't know. Like it was just the same propaganda here, except that he didn't have more people around him to teach him the data. Because the news, by the way, doesn't teach you the data. They cherry pick it.
Yes.
They'll take the red arrow, but when you zoom it out, you go, oh, that actually is pretty normal. But when you zoom in, you just see this giant red arrow going down, right? And that's what they do. They crop it and they cherry pick it. So if you really believed it, you'd be stocking up. Not saying you shouldn't stock up. It's always good to be prepared. But the vast majority of people clearly do not believe in a recession or depression is coming around the corner in the immediate future, because there is no evidence in action that they believe that.
Yep.
All right. It was a great show. Thanks for being on, Larry, as always. Guys, I hope you found value today. We try really hard to cut through the crap, give you facts, give you data, and then teach you how to go take that and sell more real estate. Lead your teams better, coach your clients better. So I hope you found value. Please leave us feedback in the comments if there's anything you'd like to see, anything that stood out to you, or that we can maybe even bring in and feature you a story or something like that on the show, or a question. We just love this. Larry, thank you again for being on the show, and also for What the Mortgage is Going On. Appreciate you, brother.
Thanks, boss. See you guys later.
For everyone else, this was I was about to say What the Mortgage is Going On. This was Scale Through the Fail, and I am your host, Robert Bean, and I hope you found a ton of value from today's show, some peace of mind and some direction in this uncertainty that's going on with the bank failures, major bank failures, and cash runs, and just everything else that's going on. Bank runs, sorry, not cash runs, bank runs. I just hope we brought some value in that showed you what to do for your clients and how to help them actually take advantage of this and come out on top. We are live every Friday, 9 a.m. Central, so we will see you next time.